Hello guys, it's your boy Focus FX here at Focus FX Academy with another educational video, and today I'll just be taking you through two powerful tools that you need to know. Actually, the reason why I've decided to make this video, it's because many people have been reaching out to me in my DM asking me what these tools are, and you know what these tools are, what is break of structure, and what is CHoCH or change of character. So, break of structure and change of character. What are these two? What are their functions? And how can you use these two to up your trading game? So, that is what I'll be taking you through today. But before we get into that, I would like to start by, appreciating your love and, for sticking around for too long, for, being family, for being part of this community, my community. And, yeah, I do appreciate it. And currently, we are at 300 plus subscribers. I don't take this for granted. I don't take this for granted. I really appreciate the love and your continued support. Let's take this channel from 300 now to 400, and from 400 to 500. Yeah, because I'll keep on posting good educational content, educational stuffs for you, simplified forex content for you, so that you can also up your trading game. Now that that's done, let's get into it. So, like I said earlier, I get asked this question a lot. Hey, Focus, what is the difference between BOS and CHoCH? What is BOS? What is CHoCH? Okay, BOS and CHoCH, these are just initials for break of structure and change of character, respectively. So I figured that instead of answering this question again and again, it would be much better if I just made a video about these two powerful tools and how you can use them to up your trading game. Truth be told, most traders don't know what these tools are, and majority of those that do tend to confuse the two, but each serve a different purpose, which you'll see in this video, because in Focus FX Academy is here to teach you all that. So if you're here for the first time, please remember to subscribe and hit the notification bell so that you will always get notified whenever I upload new video. Now, for you to understand what break of structure is, what change of character is, for you to fully understand, you also need to know what phase the market is at the moment. You need to know what the market is communicating. Supposing like you enter the market, right? Yeah, you need to know how to analyze the charts first before you uh, know these tools. So you've entered the market, you've seen the market is making something like this, dropping, another impulsive move, dropping, another impulsive move, dropping, then another impulsive move, then dropping, then another impulsive move. So this impulsive move, then we have our swing low, then another impulsive move, our swing low, our swing high, there's a correction, pullback, the price continues to drop, then impulsive move, drops, then another swing high. So this is our break of structure, this is our break of structure, and these are our swing low. These are our swing low here. So after every impulsive move, the price will always pull back to mitigate that zone left behind. That's the mitigation. That pullback, that is the mitigation before price continuing with the prevailing trend. Now that you have that in mind, now that you have that in mind, and you know that what the current phase of the market, Another thing now that I'm going to teach you is now the BOS. So, what is BOS? BOS, other traders call it a continuous creation of lower lows and higher highs. Others call it a trend continuation pattern. Well, they're both correct in their own way. But to me personally, a break of structure is a break of swing high or low. The way you define your swings is up to you. I have my rules, others have their own. So, break of structure, uh, if you can remember, I said break of structure, something. So, this is a break of structure, this is a break of structure. Now, this is a high, high, another high, high. So, you see, the price continues creating new high highs. So, that is our break of structure. And those that say the price, that the break of structure is also a continuation pattern, they're right. Because as you can see, after creation of this new high, the price pulled back, then continued, uh, creating new high highs. The same thing applies on a downtrend. Price drops, pullbacks, drop, pulls back, drop. There's a BOS, there's a BOS. Pulls back to mitigate the zone left behind, pulls back to mitigate the zone left behind. So this is our BOS. This is our BOS. Now that you know what break of structure is, what is change of character? So change of character is a break of substructural high or low that isn't a swing structure. It's a sign of a price changing from bullish to bearish and vice versa on that time frame. So let's say so these are break of structure. These are break of structure. But price fails to break this new low, and instead it rallies up, then continue rolling up. So you see, this was our first low, our first low, our second low, this is our third low, and price failed to break this low. So what does that signify? It signifies that the price is changing direction. So our change of character is here. Here is our change of character. Now, this is our first high, and this is our second high. So you see how these two tools work. Yeah, they each serve different purpose. And once you fully understand how the both work, you'll be one step ahead in, scaling up your trading game. I'm just gonna show you a simple but in-depth way of looking at these structures, and it works on all time frames, and it's a good indicator of whether a high or low is likely to hold or get swept. So you're at the market and you see something like this, then another one, pull back, price drops, pull back, price drops, then there's an impulsive move, then price drops, then price rallies, then drop. So what is that? That is a break of structure. That's a break of structure. That's a break of structure. Now, after a break of structure, we expect the price to pull back and mitigate a significant zone in the previous range before continuing to break structure. So the price dropped, right? Broke structure, drop, broke structure, drop. So here is our first low, and after this, after this break of structure, the price pulled back to do some mitigation here. Then it dropped, then pulled back, did some mitigation, dropped, pulled back. It failed. Sorry, it failed here. It failed to, this is an mitigated zone. This is an mitigated zone, but then again it failed. So if we don't get this mitigation, it is likely that the high or low that failed to mitigate becomes our liquidity. So this unmitigated zone here is our liquidity. But as you can see, the price continued falling. Then it changed character. First high, our second high, and our BOS here. Now, I'll just show you a live example, or rather in a chart, and how you can trade break of structure and change of character. Now, like I said earlier, that after every break of structure, price always pull back and mitigate a significant zone in the previous range before continuing to break structure again. And if we don't get this mitigation, it's likely that the high or low that failed to mitigate will become liquidity. So if you can just look at this chart, it's clear now. So I'll show you our lows and our highs. So this is our first low, this is our second, this is our third, this is our fourth low. Now, as you can see, the price continued creating new lower lows and higher lows. So that's our first break of structure. This is our second break of structure. This is our third break of structure. Now, price failed to break this low, creating a new high. So that new high is our first, or it's an indication of a price changing direction. So here is where our change of character is. Now, this is our first high, this is our second high. So so this is our second high here, and this is our third high. So you see, the price changed direction. The previous trend was bullish, was bearish trend. It was on a downtrend, as you can see. The price from here, the price kept dropping, 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 up until this level here. The price failed to break this low, indicating a change of trend direction. So now the price is creating new higher highs and higher lows. So you see, this is our first high, our second, and this is our third. So the price changed from downtrend to an uptrend. Now, back to what I was saying, that after every break of structure, price will always pull back to mitigate a significant zone in the previous range before continuing to break structure again. And so broke structure here, right? Then price pulled back here. It has mitigated a zone in the previous range before continuing to break structure again. Same thing here, pulled back, mitigated a zone in the previous range before continuing to break structure, but it failed at this level. Now, so this is how you trade break of structure. you know that the price will pull back. You know that the price will pull back. And you need to understand that after every, after formation of every break of structure and change of character, price always leaves behind or creates a new or fresh supply and demand zones. Like in this case, so price broke structure here. So depending with your knowledge of supply and demand, you know that when the price drops, then it rallies up, then drops, it forms a supply, and our supply is at the base of that drop, the rally. When the price rally, then drop, now the rally becomes our our supply. What I'm trying to say, I'll just zoom. So this price, after this BOS, the price left behind a new supply, right? Now this is the supply that was left behind, the fresh supply. So just look here, you see these two bearish candle, that's the price dropping, so that's our first drop. Then this bullish candle, the price tried to rally up, but it failed, so the price continued dropping. So this rally here, this becomes our base. This is where we enter or we place our orders, our sell orders. So I'll show you what I meant. So I hope you've noticed where I marked my supply zone. So we put our some, yeah. So here, then I'll just extend this. Yeah. So you see this supply here, this unmitigated supply here, or this fresh supply zone that was created when the price broke structure, the price eventually pulled back to that zone and activated the sell orders, and the price started declining. So you see, if you had placed your sell limit orders here, then you would have easily uh, had won this trade. But as you can see, the price came here, then started changing direction like that. Why? Because we have a change of character here, right? And like I said, when there's a break of structure and a change of character, they leave behind a new supply and demand zone. Now let me just show you the supply or the demand that was created when the price changed to character. So again, with the knowledge that you have uh, of supply and demand, you know that when the price rallies is the upward movement of a price, then it drops, then it rallies again. The base, when the price drops, becomes our demand. Like in this case, the price rallied, then dropped, this black this bearish candle, then rallied. That is a new demand created when the price changed character. So we put our sell buy limit orders there, our buy limit order there, and as you can see, the price pulled back also, activated our orders twice. You know, the price came at this level twice before finally going up. Yeah, so basically that is how you trade break of structure and change of character. I'll show you another example of or another entry when the price broke structure. So I showed our first. Now here is our second entry. So the price broke structure here, created a new supply zone here. You can see this big, sorry, where is it, where is it, where are you, where are you, where are you? Okay, here you are, you can't hide from me. Okay, so price dropped here, dropped, then rallied, then dropped. That is the supply that was left behind when the price broke structure. So just put it here. Where? Yep, here. So I always like to put my orders at the 50% of that base area on my supply zone. And as you can see, the price came, hit our sell limit order, then it dropped significantly up until this level before pulling back up. And the same concept applies in all time frames, in any pair that you want to trade. The concept is the same, whether you are on an uptrend or a downtrend. The concept is the same. So that is how you trade break of structure. Now remember, I said earlier that in case that in a situation whereby the price pulls back but fails to mitigate, the price pulls back and we don't get that mitigation, then it's likely that that high or low that failed to mitigate becomes a liquidity. Supposing that this break of structure here, we have a break of structure here, then the price pulled back. Now supposing it failed to mitigate, mitigating so let me just remove this. Sorry. So supposing it failed to mitigate after pulling back, then this would become our liquidity. Our liquidity would lie here. So basically that's how these two tools work: break of structure and change of character. Don't confuse the two. Like I've shown you, they both serve different purpose. One, in simpler term, is a continuation pattern. That is break of structure. It keeps, or rather it tells you that this continuous creation of lower lows and higher highs, then the trend, it's gonna be the trend is going to be it's going to be a prevailing trend. The trend is prevailing because of the continuous creation of lower lows and higher highs. So whenever you see a break of structure, know that the price is likely to continue with that pattern, whether it's on an uptrend or a downtrend. And now that I've taught you how to trade break of structure, then you'll use that knowledge. That knowledge that after every break of structure, the price will pull back to mitigate a significant zone in the previous range before continuing breaking structure. So that's how you trade break of structure. And change of character tells you that the price is going to change direction. If the prevailing trend was a downtrend, then it's going to switch from downtrend to uptrend. If the trend was uptrend, it's going to switch from uptrend to downtrend. Yeah, that's the purpose of change of character. And like I've told you, or rather, like I've shown you how to trade, how to trade change of character, you keep the same concept. You identify the supply or the demand zone that changes direction, ensure that it breaks structure, set an order, and let the trade play out. It's as simple as that. Simplified. Yeah, simplified. So that brings the end of our session today. Yeah, so guys, until then, but before I call it, before this video ends, I would just like to remind you that if you haven't subscribed to my video yet, kindly do so. Kindly subscribe to my video. uh, Click the notification icon, that bell icon, so that you get notified next time I upload new video. You'll be the first to know. So kindly do so. You don't want to miss my future videos, my future educational videos. Yeah, so guys, until then, take care.
Wait a minute! Who are you?